all of our new products. Electric will be the future, and we are contributing to a better environment, and we are leading into this technology. And by the way, it's not only battery electric, it's also this element of connectivity and autonomous for the future. So we will get a different kind of mobility. We will get a smarter mobility.
Absolutely, and I'll come to autonomous driving in a second, but I want to just keep on the electric theme. We have Jaguar offering an electric options. When will Land Rover?
Watch the space.
Oh, come on, Ralph, you can do better than that.
Yeah, no. Sorry, we don't make any announcement about future models, product portfolio, and so on. So please, it's quite clear that we are leading, and we will roll out this type of technology according to the demand of the customers, but also quite clear according to our own cycle plans.
Okay, let's then move on to autonomous driving. You did a deal with Waymo on self-driving cars. Tell us a little bit about that. You know, since this environment has changed, since that Uber crash that we had as well, autonomous cars are possibly in the future, but tell us about the deal with Waymo, though, in a little bit more detail.
At the very moment, nobody really can offer autonomous drive. We have a lot of driver assistance in the cars already, but not a really autonomous drive. This kind of technology needs not only one OEM. This needs government, academia, and collaboration across sectors of the industry. Nobody can do it on its own. And we have therefore teamed up with the very best, with Waymo, the former Google project, which means we have teamed up with the very best.
Well, with that in mind, where are you with the development of an autonomous vehicle? Have you done any testing yet? I know it's early doors with Waymo, but how do you actually do these autonomous tests? Are you doing them in China, the UK, or where, if at all?
We are testing all around the world, but quite clearly, predominantly in the UK, where we have an opportunity to do so. And you know that means we also have to sharpen our IT. This means million lines of codes have to be developed and written to make the vehicle safer for the future. Overall, this kind of technology should make the roads safer. 90% of all accidents happening on streets nowadays are from the drivers. And we have 1.25 million deaths globally every year on the streets. And if we can reduce that, we can really deliver an active contribution to make our journeys safer.
Well, Ralph, thank you so much for joining us. Ralph Speth, he is the CEO of Jaguar Land Rover.
Well, that was the CEO of Jaguar Land Rover, Ralph Speth. I'm Jayesh Khilnani and Agam Vakil joining me on the show to tell you all you need to know going into trade today. Let's start with the trade setup now. Now, if you look at the global markets, the Dow Jones, in fact, lost for the fifth consecutive day and slumped more than 400 points for itself. If you look at the European indices, closed largely mixed. But if you have a look at the Asia-Pacific indices, the Nikkei is trading more than 0.5% lower, while the Hang Seng trading about 1% lower. So what is the SGX Nifty actually telling you? That is currently trading with a cut of about 60-65 points. Earlier in the day, it was trading about 80-85 points negative. So one can expect a gap down opening as far as the Indian markets are concerned. Let's have a look at some of the areas that we got closed largely mixed, led by Infosys and HDFC Bank, which declined more than 1% each, followed by Wipro and Vedanta, which also closed negative. In terms of the losers that we had, ICICI Bank and Dr. Reddy's, those managed to gain more than 1% each for themselves. Now, as far as the commodity markets are concerned, oil prices are currently trading flat. However, if you look at yesterday's close, both WTI and Brent actually declined more than 1% each. Now, the major cues actually came in from the base metal space. The index itself on London Metal Exchange, that closed lower for the 4th consecutive session, largely led by aluminium and nickel. So aluminium was down about 3%, while nickel declined about 2% in trade, while we had copper, which was the top gainer, that surged as much as 1%. Now, if you look at the Shanghai Futures Exchange, most of these base metals have in fact started on a positive note, except for Shanghai Steel, which is currently trading with a cut of about 0.3%. Now, if we go to the fund flows that we had for ourselves, what the foreign institutions did was sell nearly 700 crores worth of equity, while the domestic institutions pumped in more than 500 crores of equity. However, for the month, the trend continues, where the FIs have sold more than 4,000 crores, while the DIs have bought nearly 6,500 crores worth of equity. Now, in terms of some of the key indices that we had, the Nifty managed to close higher for itself, about 0.3% in the green. However, the mid cap and the small cap index, both of those actually declined about 0.2 to 0.4%. Now, if you look at the top gainers in terms of the sectors that we had, not much to go by. There was Nifty Energy, which climbed more than 2% for itself. But the interesting bit was in the loser space, where the Nifty Metal expectedly declined about 2%, given the cues that we had overnight as well. And the Nifty IT index, that too managed to close about 2% negative. Now, if you look at the India Wix, some interesting moves coming in over here, especially where given that tomorrow is expiry, that declined about 9.5%, and Agam will tell you more about that. But if we can just look at the contribution as well, what led to the 30-point gain on the Nifty, it was largely led by Reliance, HDFC, and ICICI Bank. While on the losing end, we had some commodity names like Hindalco, Vedanta, and the IT space, Infosys and HCL Tech. But Agam's here to tell us what can we expect from the expiry given yesterday's move of the India Wix.
Well, Jayesh, a lot of uncertainty considering consolidation continues in the benchmarks, and despite the fact that we saw the Nifty eventually move above the mark of 10,600 at one point in time, it did cool off. This is of course the Nifty 50 is concerned. But moving on, when it comes to rollovers, we're looking at a little bit of a pickup, currently standing at 28%, and the same for the Nifty Bank as well, currently standing at around 31%. Both these numbers are slightly above the previous 3-month average if you work with 2 sessions to go with respect to the expiry. The India Wix has fallen below the mark of 12 once again, and when it comes to the Nifty put call ratio, that has edged up higher at around 1.7, edging towards the all-time high. Moving in terms of the way we've seen changes in open interest across options, well, unwinding in the 10,500 calls as well as the put, and well, a little more put writing coming along in the 10,600 mark. What else are we keeping an eye on when it comes to stock futures? Well, Walkhard moves into the band, so expected restricted trade there. On the other hand, counters like Jet Airways, JP Associates, and TV18 move out of the band. We also have some other counters which have seen more longs building up. So GMR Infra, as it moves up by as much as 6.6%, and we also have longs in well, something like an ICICI Prudential, which is also advanced by as much as 7.8%. The open interest in April futures has declined right now, but this is only April futures. Across series, we've seen accumulation in open interest. So these are some of the stocks that we can keep an eye on, and our markets as well. But now let's go across to Bloomberg's Paul Allen for all the top global headlines across.
France is proposing negotiations on a new deal with Iran in a bid to keep the US on board. President Macron says a new agreement should block Tehran's nuclear activity through 2025 and end its ballistic missile program. He also wants to contain Iran's broader influence in the Middle East. President Trump may abandon the current deal next month, and Iran says it will almost certainly walk away if that happens.
The United States has not lived up to its side of the bargain. That is, to its commitments to lift certain sanctions, not to impede economic relations between Iran and its economic partners. It has done all of that. It has prevented, basically dissuaded, threatened companies from engaging with Iran.
Treasury Secretary Steven Mnuchin will head to China in the next few days to begin direct talks on trade. President Trump says he thinks there's a good chance of making a deal, but if not, tariffs will take effect on a range of Chinese goods as planned. The trip will be Mnuchin's first as Treasury Secretary, although he has met his Chinese counterparts in Washington and at G20 gatherings in Europe. Noble Chairman Paul Brau has sent a second letter to shareholders in a week, pushing back against dissident investor Goldilocks. The Abu Dhabi-based fund opposes Noble's debt for equity survival plan, which would hand control to creditors and effectively wipe out existing shareholders. Brau says Goldilocks' comments are causing great harm to Noble, and it's offered no credible alternative. Short interest in Tesla rose above 30% of the available shares on April 13th. That's up from 25% 2 weeks earlier. Increasing short interest may show worsening sentiment. However, it can also be a signal to contrarian investors that the worst may be over for a stock. Short position data is reported on a delayed basis by the Nasdaq every 2 weeks. Tesla has fallen more than 5% since April 13th. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
I don't think 3% is a magic number. We, exceeded 3% back in 2013, I think, and then a couple of years later, we're down at 1.36. So I think, if we were to see the yield get above 3.25, then maybe it could break out. But anything up until then, I'm not too worried about.
Not much anxiety. Certainly, it is an important number. It certainly is a psychologically important number as well. It's been 2014 since we've seen that number.
So generally, higher yields are positive for equities across the board, up into a level.
Up into
a point. We think that level's about 3.5% on the US 10-year. So if we work with the premise that we're in this band where bond yields can rise, but also equities can do well, then it's particularly positive for European equities.
If you think about equity market risk premia and valuation models, then obviously the real yield is what is the driving force. This is why I've said earlier, I think there's a more psychological component to the fixation around the 3-year nominal in the 10-year.
For us, what's been clear is EM, both equities and debt, have been a great place to be and continue to be of strong interest to us based on the macroeconomic fundamentals in EM, based on how EM has actually performed both in periods of volatility. Look at 0809.
But it's changed, as we said. You can't apply the previous rules to the current rules, can you?
That's true. Yeah. That's true. But actually, if you apply some of the previous experiences and then you look at today's conditions, it actually feels like a more healthy environment than ever to be actively investing, not just passive, because of the difference between the few hundred stocks in a passive sense and the thousands of stocks
Absolutely.
in emerging economies.
Last year was passive. This year, you've got to be active.
This year, you have to be active, particularly in EM. But I think that those changes, exactly what you're identifying, is why we find EM, both debt and equities, a really interesting place to be from a global perspective.
Sheila, I'd just like to wrap things up with the dollar. How is that informing your investment decisions, and where does it go next? Have we turned around for it, or what?
Look, I think that the dollar is a real challenge for many of our clients from an international perspective, because it's been hard to predict, and their expectation is in a rising rate environment, they're not going to get any relief, right? So I think if you look at what the U.S. has said, certainly from an exports perspective and a general perspective, they seem quite happy with the way things are going. But from a global markets perspective, it's hard to believe we can continue on this trend for an extended period without some reaction.
Let's get your check on the commodity space, starting off with oil prices, which are currently trading steady after a more than 1% decline overnight. Now, a couple of reasons for the decline. One is that the French president proposed a new deal to contain the nuclear program of Iran and also, keep the U.S. on board. The other news that we're picking up is that API is likely to report an inventory buildup of more than 1 million barrels for last week. So that's the negative coming about for oil prices. As far as brokerages on oil are concerned, we have one from Stancy which says they have in fact increased their 2018 average for Brent to about 71 per barrel as compared to 61 per barrel earlier. As far as the base metal space is concerned, the index itself closed lower for the fourth consecutive session, largely led by aluminium and nickel. So aluminium in fact is down over 10% for the last 2 days, and nickel also posted its fourth straight day of loss. We had a couple of gainers in terms of copper and tin, but copper was the top gainer in trade, traded about 1% higher. Now if you look at the Shanghai Futures Exchange, most of these base metals have started on a positive note, except for Shanghai Steel. As far as precious metals are concerned, two of them were in focus: gold, which actually snapped its 3-day losing streak, and palladium, which actually posted its biggest two-day decline in about 15 months. That is currently trading about 3 to 4% down for the last couple of days.
Well, a bunch of news that we're tracking this morning. To begin with, we are tracking Hero MotoCorp, where the company has gone ahead and raised the two-wheeler price by up to rupees 625 to offset input cost pressure. Second in the list is Gokuldas Exports, where the company's board of directors have approved the opening of QIP with a floor price of around 90 per share, which implies a discount of 5% from the current market price that was seen in the previous session of trade. Also, we are tracking Bharti Infratel, where the company, the Indus Tower, is set to merge with the company in a deal which is expected to be announced today. This is an ET exclusive that we're tracking. And also we have on the list ICICI Lombard, where some kind of reaction is expected, given that both Westbridge Capital and Rakesh Jhunjhunwala, which had teamed up to buy Star Health Insurance, they are going to be they're expected to match an offer of 6,500 crore that ICICI Lombard had earlier offered to buy Star Health Insurance Company. Also in bulk deals, couple of them that we're tracking. First one is Advanced Enzyme, where the promoter has offloaded a good 2.1% stake in the counter. Second one is Ajmera Realty, where the promoter has offloaded 1.4% stake in this counter. Also in terms of earnings that we're tracking, Persistent System, not a great set of numbers, weak in fact. If you look at the net profit, that's down almost 20% for this company. EBIT has come down also by 32.7% for this counter year-on-year basis. In terms of Raymond, where we are tracking a stable set of number for that counter, at least an operationally fairly strong quarter that we'd say. EBITDA is up by 32% for this company. Separately, the company is also expected to foray into real estate development, where the company's board of directors in its meeting held yesterday have approved a 300 crore development plan for 20-acre land at Thane.
Well, we're not expecting fireworks when it comes to Wipro in this fourth quarter. Let's start off with the IT services revenues expectations. We're looking at a likely uptick of as much as 2.5%. And on the other hand, we can expect margins to come in at around 16.8% against 14.3%, with net profits consequently moving up by as much as 10.2% quarter on quarter. And the reason why we are looking at the inflation in margins as well as profitability is because the company took a provision of around 317 crores on account of an insolvency in one of its clients, and that's the reason why we are looking at that big uptick when it comes to profitability numbers for this particular quarter. That said, when it comes to the guidance for the first quarter of FY19, we're likely to see a minus 5% to a 2% in terms of growth, and this is largely because of the fact that it is a seasonally weak quarter for Wipro. Moving in terms of key factors to watch, we're keeping an eye on the company's plans in the digital services arena, as well as progress on large deals. We're also keeping an eye on the outlook when it comes to its traditional legacy businesses for FY18, as well as updates in the BFS and energy verticals. And we're also keeping an eye on the kind of measures that the company will take to defend its position in infrastructure management as well as business process solutions. But on the whole, we're expecting a tepid quarter from Wipro going in. But that's as far as Wipro is concerned. We also have a cement major announcing the numbers. Nikki, what can we expect from Ultratech Cement?
Not a great quarter for Ultratech as well. If you look at the top line growth, though we're expecting a number of 29.5% year-on-year basis growth to a number of 8,543 odd crore. If you look at the EBITDA, that's almost seen up by 15% for this company at a number of 1,467 crore. However, the margins are expected to shrink to 17.2% 6.2% as compared to really roughly 19.5% that we've seen in the corresponding quarter. Also, the profits are expected to drop by as much as 22% to 537 odd crore. In terms of other key parameters, we'd be watching out for volume growth, which is expected to be up by as much as 24% year-on-year basis to a number of 17.5 million ton as compared to roughly 14.1 million ton. This is an important parameter that we'll keep an eye out for, given that the company has been wrapping up of JP capacities. Also, EBITDA per ton, has been seen down by as much as 7.7% lower to a number of 839 as compared to 908. This is on account of higher fuel cost, which is expected to weigh on the operating performance of the company. Besides that, realization per ton, another important metric for tracking cement companies, that however is seen up by 4.2% to a number of around 4,882 crore, 4,882 rupees. In terms of other things, we'd be keeping an eye out on the pricing and the demand scenario, given the depressed pricing trend, along with the volume growth and the cost pressures like that of freight and power expenses.
Okay, thanks for that, Nikki. If you look at Fortis, that stock will be in focus. We have 3 new offers coming in for Fortis in the last 24 hours, and starting with IHH, they also have given a binding offer. Of course, it's a partial binding offer to infuse 650 crores on an immediate basis into Fortis Healthcare. Of course, they also say that they'll be investing up to 3,350 crores into Fortis, subject to in the due diligence which has to be carried out in a period of 3 to 4 weeks post the infusion of 650 crores that IHH would like to make at this point in time. Also, they say that the non-binding offer of the 3,350 crores would be at a price of 160 rupees per share, and they also say that they will also want rights to appoint 2 directors on the board of Fortis Healthcare. Also, the timeline that they have given is to the tune of 4th May as far as Fortis board is concerned. Also, we have Radiant Life, healthcare major backed by KKR, the private equity player. Now, they have given a binding offer only to buy the Mulund Hospital at an enterprise value of 1,200 crores. Of course, this probably translates into a cash availability of 680 crores to Fortis Healthcare, according to the press release. Also, they say that they are also proposing to hive off the diagnostics business, which is SRL, in a separate new entity. Of course, this new entity would be monetized later on, according to the shareholders' approval, is what they have said. Also, the new hospitals business will be formed into a new company, which will also entail an open offer coming in from the Radiant Life Management, and also they are proposing to acquire the RST assets for Fortis shareholders with a rights offer by the new company to fund the overall acquisition. Finally, we have Manipal also revising the overall bid. They have upped the overall valuation for the hospital business to over 6,300 crores. More importantly, they also propose to buy a 5% stake in SRL. Of course, this is to provide immediate liquidity to Fortis Healthcare. Also, they have said that they have a standing credit limit of close to 650-700 crores from ICICI Bank, which again would be used to resolve the liquidity issues of Fortis Healthcare on an immediate basis. They also have said that they will now give an open offer for the demerged hospital business, which is proposed to be merged with Manipal Healthcare. So a 26% open offer is likely to come in there, according to Manipal's revised offer, at a price of no less than 121 rupees per share, as far as the hospital business is concerned. So clearly, at this point in time, it's up to the board how really does this how really do they take up the overall matter, because we have Manipal, which has revised the bid the 3rd time. We have IHH also revising the bid the 3rd time, and also we have Radiant as well as the Munjal and the Burman family revising or bettering the overall bid 2nd time. So very interesting to see how really does the things shape up for Fortis Healthcare, because the board meets this week to evaluate all the binding offers, and now we have 4 binding offers versus the earlier 2 binding offers which were there till last week.
Well, let's also get you a check on the top 3 stocks that you need to keep on your radar based on the delivery buying and selling as of yesterday. The first stock to watch out for, that would be Coromandel International. That declined nearly 11% in trade and saw delivery selling of nearly 60 crores. Now, this is on the back of weak Q4 numbers that the company reported yesterday, and the delivery volume actually surged nearly 3 times at about 12 lakh shares as compared to its 5-day average, and the total volume surged more than 3 times at about 26 lakh shares as compared to its 5-day average. The second stock to watch out for from the life insurance space, ICICI Pru Life. Now that gained about more than 7% in trade, once again on the back of good Q4 numbers that the company reported, and saw delivery buying in excess of 250 crores. The delivery volume actually surged nearly 3 times at about 62 lakh shares as compared to its 5-day average, and the total volume surged nearly 4 times at about 1.6 crore shares as compared to its 5-day average. Last and final stock, once again from the life insurance space, SBI Life. Now that gained about 4% in trade and saw delivery buying of just about 51 crores. The delivery volume managed to double at about 7 lakh shares as compared to its 5-day average, and the total volume surged more than 150% at about 13 lakh shares as compared to its 5-day average.
All right, markets and earnings will be in focus today, and you'll find all of that action right here on Bloomberg Quint Live. But there are also several stories that you can find on the website. Here are just a few of them. First up, the Committee of Creditors for SR Steel has sought more information from bidders ArcelorMittal India and New Metal Mauritius regarding their ineligibility. 2 bankers in the know have confirmed. The Telecom Tribunal stayed parts of the regulator's February 2018 order on predatory pricing and said that no penalty would be levied on incumbent operators. The tribunal, in an interim order, stayed the new definition of significant market player until it decides on a challenge to the order. All right, that's all you need to know going into trade today. Up next is Indian Open, and that promises to be a power-packed session. Do keep watching Bloomberg Quint.